Okay, we've got Sandip Agarwal joining in the show right now to talk about how he's reading into Infosys' performance. Sandeep, hi, morning. Surprisingly lifting its FY26 guidance now to 3.5%. Yet, Sandeep, you warned about AI-driven effort reduction hurting long-term growth the last time also that we were chatting. Is this upgrade a genuine demand recovery or just a short-term bounce, you think?
Hi, good morning, and thanks for having me on the show. So yes, the quarter three performance has been slightly better than what was anticipated, and because of that, obviously the guidance sees upgrade because even the upgraded guidance implies a negative to 0% kind of growth, which I think is a very low ask. So the numbers are definitely better. They have also done great job on the margin front, and even the order book because of the NHS deal is quite strong. Only thing which we have difference of opinion on the sector is that we continue to believe based on data that this is now a very matured sector. So expecting any substantial growth of even double digit for the large cap is very tough. I don't think that is going to happen even in next 3-4 years. So we are more like mid single digit to low single digit growth, and for that we believe the peg ratios are very high. At the same time, because of good quality management and substantial amount of cash flow this industry generates, there is a premium which clients attach to it. The investor wants to attach it. They are also favorite of some of the dividend funds. So no doubt about it. But at the same time, seeing the industry, I believe that the amount of reduction in effort which is happening, this industry will be a low growth industry of 4-5% for the large cap, 10-12% for the mid, and 14-15% for the small cap. And the peg ratios are very high except for the small caps. So that is our view, and we continue with that view.
Because, I just wanted to take a leaf off that because you have mentioned that IT valuations are still not comfortable despite better than expected numbers. With Infosys ADR, Sandeep, now jumping, overnight almost 10%, the stock has run far too ahead of its 5% revenue growth reality. What happens when the stock opens today?
Very tough to give call because we don't know how people are positioned, but I think the correlation with ADR has not played out in the past in a big way. So I would not read too much from that because ADR has its own set of environment in which it operates, the liquidity and lot of things are there. I think these numbers are definitely decent and better than expectation, and there should not be a negative read through on that. But yes, this is a sector which is kind of quasi-cash slowly, and maybe a good replacement for much more expensive sector like FMCG, where the growths are similar, but multiples are 2-3 times more expensive than this sector. So maybe some investor would like to slowly replace their FMCG proportion to IT. I think that makes a lot of sense, and that could be a reason why these stocks can do well in the future.
Hi, Sandip. Morning. LTTS also came out with numbers. The top line was disappointing, but margins went up quite sharply. I'm not sure if you've had a chance to look at those numbers. Talk to us if you have. Give us perspective. What's your sense of the numbers and that margin number going up, material positive in your opinion?
So, I did have chance to see the numbers. So, again, what we look at this size of companies generally are the growth because, margins you can make out margins like, one time they can go up and also they can also go down when the scale is not there. Right now, if you see last 2-3 years since growth has gone down in the industry, margins everyone has been able to broadly maintain. So we are not very excited by the margin, but let me tell you that, we will always prefer ER&D plays versus traditional IT services play if they are available at a reasonable price. So from that perspective, all these ER&D companies, whether it is L&T Tech, KPIT, Tata Elxsi, all of them are going to grow much faster than the traditional IT services companies. The only challenge is that, that too is discounted by the investors. So investors are way ahead of time and they have assigned a much substantial high premium to them. So it becomes very difficult for us to, again, justify them on valuation front. So that is the broad way we look at the sector. I believe the sector is very expensive unless, someone wants to replace something which is even more expensive with this. There is no real investment rationale which is there in the sector currently.
Understood. Okay, Sandeep, great to have you on the show. Well, from Sandip Agarwal to now Sandeep Sabarwal.